Welcome to the deep dive. Today, we're really zeroing in on the euro-dollar exchange rate.
Mm.
You sent over quite a stack of reports. We've got analysis from Bank of Singapore, Deutsche Bank, Berenberg, ING, UBS, Sojin. Quite the list.
Yeah, a lot of different takes, but some interesting common threads emerging.
Exactly. So our mission today for you listening is to kind of cut through all that and get to the core insights. What's the likely path for the euro dollar? And maybe more importantly, what are the real forces pushing and pulling it?
Right. It's complex.
Okay, so let's maybe start unpacking this.
Well, what jumps out right away looking across these reports is this growing feeling that the euro might strengthen.
Yeah.
But why it might strengthen and, whether that trend will actually stick. That's where it gets really interesting.
Right.
It's definitely not a simple case of, one currency just doing great. It's more about how things are playing out on both sides of the Atlantic.
Okay. And Bank of Singapore, they seem pretty bullish on the euro, right? Even talking about maybe $1.20 plus in the next year.
They are. Yeah, their main argument really hangs on this phrase they've coined, sell America.
Sell America. Okay, what does that actually mean in practice?
It's basically when you see U.S. assets, think government bonds, stocks, and the dollar all weakening at the same time.
Ah, okay. A coordinated decline.
Exactly. And what's really striking is they say this has already happened 10 times just in 2025.
10 times already this year. That feels like a lot. Makes you wonder if something deeper is going on.
It does, yeah.
Yeah.
And they point out historically these kinds of simultaneous drops often happen during times of, major economic stress or uncertainty. Now, their chief economist, Mohi-Uddin, he suggests President Trump's policies might actually be making these sell America days more frequent.
Interesting.
Yeah, he sounds pretty cautious about U.S. treasuries and the dollar looking ahead.
So the worry isn't just normal market ups and downs. It's more fundamental, like concerns about the U.S. financial picture overall.
Precisely. That's what the Bank of Singapore is highlighting. Global investors getting a bit anxious about U.S. tax cuts, the rising budget deficits, maybe even some weaker treasury auctions we've seen.
Right, the sustainability question.
Exactly. Is the U.S. fiscal path sustainable? That unease seems to be prompting a bit of a rethink about holding U.S. assets.
And we've seen the euro move already, haven't we?
We have. I mean, it started the year around, $1.02, and now it's hovering around $1.13.
Yeah.
So that forecast they have, aiming for $1.23 within a year, but it certainly makes you sit up and take notice.
Yeah, it does. The big question is this just a temporary shift, or is it something more structural, changing in investor confidence?
That's the million-dollar question, isn't it? Or maybe the million-euro question now.
Maybe. Okay, so that's the sell America angle, painting a picture of potential dollar weakness. But, like you said, the euro needs its own story. For it to strengthen, the eurozone needs to look attractive. Germany often comes up here.
Absolutely. And that's where Deutsche Bank comes in with a more positive view on the Eurozone side. They think Germany might have hit what they call escape velocity.
Escape velocity. I like that. Sounds dynamic.
It does. Basically, they think the German economy has maybe finally gathered enough steam to pull clear of the stagnation it's been in. They're optimistic for this year.
Okay, what's behind that optimism? What's driving this German momentum, according to them?
Well, Deutsche Bank points to a few things. One is this idea of tariff front-loading.
Meaning businesses rushing imports before potential new tariffs?
Kind of, yeah. Anticipating trade changes. Plus, they see pretty solid consumer demand. And the construction sector seems to be picking up, too.
Okay.
Their chief economist, Robin Winkler, he actually thinks the general consensus forecasts for German growth are too pessimistic. He sees more upside.
So a potential German comeback is making the euro look better to investors.
That's the idea, yeah. The prospect of Germany doing better, especially maybe under Chancellor Merz, it's seen as potentially closing that economic performance gap with the U.S.
And others are picking up on this.
Seems so. Holger Schmeiding at Berenberg Bank, after some investor meetings, apparently just came out and said, Europe is back.
Wow. Bold statement.
Yeah, the feeling seems to be that maybe the U.S. outlook, partly because of President Trump, looks a bit less appealing, while Germany looks ready to step up.
Interesting dynamic. So it's not just running away from the dollar, it could also be running towards a more hopeful Eurozone story. That must be showing up in the flows, in the actual exchange rate movement.
It definitely is. I mean, the euro-dollar rate is up, over 9.5% already in 2025? That's significant.
Yeah.
And Chris Turner over at ING, He makes the point that the euro is really benefiting because it's the most liquid, easiest alternative if you're looking to move away from the dollar. He sees clear signs of investors reallocating their portfolios.
We did see a bit of a pullback recently, though, didn't we? It hit a high in April, then sort of settled back.
Yes, that's right. It peaked around 1.1572 on April 21st, then sort of consolidated, dropped back towards 1.11.
But the demand held up.
Apparently so. The report suggests that dip actually brought buyers back in, showing there's still underlying interest in a stronger euro. Konstantin Bowles at UBS, for instance, he sees this 1.1 to 1.13 area as a pretty good spot to get in if you think the euro's heading higher.
And UBS has specific reasons for thinking it could go higher, maybe even hitting that 1.20 mark again.
They do. Their thinking involves Germany potentially loosening its purse strings a bit, easing that debt brake rule.
The constitutional limit on borrowing, yeah.
Right. And also spending more on defense. They think these things could push Eurozone growth over 1%, which in turn might mean the European Central Bank, the ECB, stops its monetary easing.
Okay, so better growth, maybe tighter money. That's usually a recipe for a stronger currency. Did UBS mention any other sort of risk factors that could push the euro up?
Yeah, they listed a few interesting ones. One is about the Federal Reserve leadership. Jerome Powell's term as chair is up in May 2026.
Right.
And UBS raises the possibility that President Trump might appoint someone seen as more dovish, more inclined to cut rates. That could weaken the dollar.
Okay, that makes sense. What else?
Any real progress towards peace in Ukraine, that would obviously be a big positive for Eurozone stability and sentiment.
Definitely.
And finally, just weaker U.S. economic data. If the U.S. economy starts looking softer than expected, markets might start pricing in more Fed rate cuts sooner, which again tends to pull the dollar down.
So quite a few arguments lining up for a stronger euro, but...
There's always a but, isn't there? Societe Generale sounds a bit more cautious.
That's right. They kind of pump the brakes a little. So a lot means that maybe, just maybe, a lot of this good news is already baked into the price.
Already priced in, okay.
And they also flag some lingering uncertainties that could still cause problems for the euro.
Like what specifically? What are they worried about? Well, for one, the lack of real movement on those U.S.-EU trade talks, the tariff negotiations, that's still hanging out there.
True.
And also Russia's continued refusal to seriously discuss peace in Ukraine. Plus, on the economic front, they point to the latest Eurozone PMI data for May. The composite index actually missed expectations, came in a bit weak.
Oh, really? Below 50?
Just under, 49.5. And the services part dropped too. So this slightly softer data, Sajjan suggests, could actually give the ECB cover to cut interest rates in June.
Ah. And if the ECB cuts rates, especially if they cut faster than the Fed or the Bank of England, that could hurt the euro.
Exactly. That's the potential headwind Sajjan highlights. If the ECB gets ahead of the curve on rate cuts compared to the Fed and the BOE, that could counteract some of these other positive forces pushing the euro up.
So it's really not straightforward.
Not at all. It makes the ECB's upcoming decisions really critical to watch. That divergence in policy is a key risk.
Okay, so let's try and pull this all together. Sounds like we've got a mix of things pointing towards the euro gaining on the dollar. There are these sell America vibes driven by worries about U.S. finances and politics.
Right.
Then you've got growing hopes for a German economic recovery, making the Eurozone look, well, more attractive. And we're seeing investors react to this already.
Yep, the sentiment shift seems real.
But on the other hand, we can't ignore the potential roadblocks, things like trade tensions, geopolitics, and crucially, what the ECB decides to do with interest rates, especially if Eurozone data stays a bit soft.
That sums it up pretty well. It really shows how currencies are caught in this constant push and pull of different economic and, frankly, political forces. Nothing's ever guaranteed. These reports give you a good sense of the different angles you need to consider.
Absolutely. So for you, listening to all this, the challenge now is figuring out which indicators matter most to you for tracking where the euro-dollar might go next. What signals will you watch? And maybe think about how some unexpected global event could suddenly shift this whole picture again. Definitely some food for thought there. Thanks for joining us for this deep dive